Well, stocks failing to gain traction and rally on the final day of 2024 as we close out a very strong year for the market, with the S&P 500 rising more than 20% for the second straight year and the NASDAQ soaring almost 30%. Joining me now, Laffer Taylor, CEO and CIO Nancy Taylor. Nancy, it's great to see you on this final trading day of the year. Always enjoy your commentary. It's rough couple of days for the market to close out the year, but the bigger picture here, it's been the best 2 years in a quarter century for the market.
And this is true. Is we know, or if you're trying to get into the markets or trying to increase your financial education, right after the election, the markets just increased. If you looked at everything around that time, probably up till now, just kind of fairly recently, let's go back a few weeks, everything was at their 52-week highs, right? It'll be very interesting to see where if they would increase. You would have to have and productivity growth would have to shoot up higher, which is possible with this kind of AI talk that they're talking about, right? Productivity growth when the computer was introduced went up. So it'd be very interesting to see what AI will how it will contribute to that part. But you have stuff at extremely high multiples, right? So eventually, when everybody becomes a buyer and earnings remain the same, there's no one else to buy. There are sellers, and the price of things go down. But it's been a good year.
Do you think that the market this year has exceeded not only your expectations, but many of those predictions that we had 1 year ago?
Cheryl, thanks so much for having me, and it's good to see you on New Year's Eve. Yes, I think it exceeded everyone's expectations. You saw the strategists coming in early days in the year saying, target of the S&P at 4,800, and then quickly spent the rest of the year revising upward. And so we may be a little bit ahead of ourselves, but early years in a bull market like we are right now, and especially one that's driven so much by productivity enhancing technologies, I think that we'll continue to see, as we did in the 90s, pretty strong returns for the next couple of years.
Nancy, you make the point, and this is a good reminder for everyone as they're looking at their portfolio.
So like myself, she's an investment advisor. She can actually be called I got to be called an investment advisor representative. She can be called an investment advisor because she's the CEO of the firm. Sounds like she's the owner of her own firm, and that's where that term comes in. But, she's not, it could be a biased opinion of her saying in a couple of years because, her bread and butter depends on it. But I'm also kind of optimistic that what she's saying is correct. However, if you were to see, so for example, if you were to see another boom like what we saw in November till now, I would be very scared because where's the rest of the growth going to come from, right? Where is it going to come from? And I would now, this is not investment advice. You have to look at suitability for each individual, and also people who stay with one investment strategy at the end of their investment journey make about twice as much as a person that's trying to use time allocation, right, or tactical allocation. But what I'm saying is that if it reached those levels, I would change my strategy personally, right?
For next year, the so-called, the Mag 7, you write, that's driven in advance of more than.
So Mag 7 is just the top businesses of the S&P 500, and they're pulling the rest of the S&P with them. They've had tremendous growth.
20% in the S&P 500. Some worry that these gains are too concentrated in a small group of names.
Yeah, well, I mean, go back and look at, in the
But
90s, we
historically,
had the
that's
Four
happened before.
Horsemen.
Aren't
In
you
the
saying that?
70s, it was the Nifty 50, and it was very concentrated. A few names that, including McDonald's, believe it or not, that really drove investment performance. That's pretty typical, especially when you have a technology like generative AI. But that said, that group is also generating the lion's share of net income and earnings growth. So I think if you step back from the hype and say what drives stock prices on days that the Fed officials are not speaking, it's earnings growth. And these are the companies that are expanding margins, and not just the Mag 7, but a number of the names that I sent you in my 5 for 25. These are companies that are growing ahead of the market and are really not trading at lofty valuations.
Yeah, well, I want to get to the picks, but you and I both subscribe to the Peter Lynch theory. Peter Lynch famously walked around and followed his daughters at the malls to see what they were buying. That is how he would research, companies and trends. Now,
Smart.
as far as the hedge fund industry, I love what you write. You say the average hedge fund has generated subpar returns. And I didn't realize this, but you're pointing this out that, they achieved rates of 6.4% in 2023. S&P 500 returned 26% in 2023. So that value investor is really the winner this year.
I don't know if she's using the term value investor correctly there, but I'll say this to what she was saying. There was this, I forgot what it was called. There was this theory. I'll tell you the concept of theory. I forgot the exact name of the theory, but they took a dart and they threw it at the Wall Street journals and all the ticker symbols there, and then they built a portfolio out of it, right? They also had a child randomly pick businesses through the same the same amount of companies, right? And they also had a monkey pick, and then they had some portfolio manager, right? Some fund manager pick. And the fund manager did worse than all of them. Now that says a little bit more about the fund manager than it does the kind of random selection that went on. But I'll say this is that at least I would say about 9 out of 10 fund managers don't do as well as the S&P index, right? So you got to kind of take a look at that and bake that in. Some are a lot more listen to me now. Some are a lot more resilient. Meaning that if the S&P falls, they have some beta baked into their fund or portfolio. But yeah, it's if you're just looking for growth, what Warren Buffett said in 2003 as far as picking a index fund, you can do that. You can do that. But I'll say this, as an investment advisor, what an index fund will charge you versus what basically the prices are comparable. People are like, well, I don't have to pay. Well, you do have to pay. There's fund management fees. But anyway, we'll get back to the video. I digress. I obviously have, and this is why I do these videos. I have like OCD when it comes to talking about finance, and man, I will go down a rabbit hole. So I kind of use this as an outlet, if you will. And if you're on Twitch, you can join me in the conversation. You can ask any questions you like. I'll definitely react, and I'll be happy to answer anything you guys want to ask a person in the finance industry like myself. So.
Yeah, well, and let's remember too, Cheryl, they're responsible for all the volatility because they're the ones that are buying for the next 2 to 3 days, next 2 to 3 weeks, while the rest of us are searching for names we can own for 2 to 3 to 20 years. And so that's why we always preach that volatility is the friend of the long-term investors, because these guys are chasing short-term gains. And it's very hard. As you can see, the historical returns over the last 10 years are 7 to 8% versus an S&P that's 13 to 14. So that matters over time, the compounding of that underperformance. So we encourage your view.
And the reason why that she mentioned that a lot of hedge funds use a lot of options, right? They use options contracts. So the VIX really is tied into options contracts, right? And once you start learning the stuff and you become familiar with it, yeah, it takes some time, but you'll be able to see how these systems kind of work and how they're connected to each other. And that's why I love this stuff. It's just fascinating. You can now listen, I'm not an oracle, but you can see how things are going to shape up a lot of the time, right? You can see the future to some extent.
Viewers and really pay attention to great companies and buy them on sale, and that's what volatility brings you.
Yeah, well, and some of those moves were certainly made during the pandemic and then moments after, and that's paid off. If you look at an Apple or a Netflix, for example, let's break down your 5 for 25. Amazon, ServiceNow, Spotify, Goldman, and Broadcom.
Yeah. So there's an AI theme in there, but there's also an old economy theme of companies that are pivoting to the new technology. So think of Goldman Sachs using generative AI to do some of the tasks that analysts have done historically. And same with Spotify on the advertising side. But we like these names. The first three are software names that can that as we shift from building AI infrastructure, you need a ServiceNow to conduct the traffic, interpret the data flow. You need an Amazon for cloud computing. And so those are two names that we like very much. Amazon was our pick of the decade in a Wall Street Journal interview a couple of years back. And we continue to like the name. We love the management team, and we love the free cash flow. So that's certainly one that your viewers should look to buy on weakness. And then Spotify, it's gone up a lot since we initially purchased it, but we just graduated it to our 12 best ideas portfolio. They're growing earnings in the 20% range, and you're trading at a price earnings to growth ratio of 1x. That's pretty cheap. And then Goldman, beneficiary of M&A, we think, in a lighter regulatory environment, lower potentially interest rate environment, and Broadcom's been a favorite. All of these are in our 12 best ideas. It's been a favorite for years, and we think they can continue to grow earnings. They just raised the dividend 11%, which tells you a little bit about what management thinks of the future.
Nancy Tangler, it's always great to speak with you, and Happy New Year.
It's strange that Fox will always give these short, like, weekly charts when they should probably give you like more of a year to date, or at least a 52-week moving average. But anyway, there you go. That's this one. If you like this video, please join and subscribe. And at this point, I'm happy to answer any questions that anybody has in the comments. So thank you for joining if you made it this far.